Trying to understand
Andrew,
both how to think about this film but also sort of the state of affairs when it comes to just how the movie theater business is really going.
Well, Andrew, it's nice to be with you. And, you know, we've been saying for some time in 2022, all we needed was for Hollywood to release some movies. The movie-going public is ready. The theater system is ready. And, boy, are we having a big weekend this week. AMC globally is going to have more than 4.9 million people just in our theaters alone. And this is the beginning of what we think is going to be a big holiday season.
So how do you think about that relative? And you've talked about how you need more films. What does it take to get this to be a profitable enterprise? Last quarter, you burned through about $179 million. And I think there's real questions about what the long term of this looks like.
Well, I don't have questions about the long term. I just have questions about right now, because right now, Hollywood is shorting us the traditional number of released movies. But having had lots of conversations with senior studio executives, what they're telling us is they're seeing how much money is being made in theaters. Go back to Top Gun Maverick, $1.6 billion in theaters on its run. Black Panther is, I think, going to be the second biggest movie of the year. Almost 5 million people in our theaters this weekend. We think that Hollywood is rushing to get more movies released theatrically. We're quite optimistic there's going to be considerable growth in 23 over 22, and again in 24 over 23. We're pretty confident about our future.
So let's talk about that confidence. You just raised $36.4 million from the sale of about $15 million of those preferred APE shares that had listed back in August. I want to read you something that Wedbush Securities analyst Alicia Reese wrote. You may think it's cynical, but I'm curious what your reaction is. She said, I think their announcement...
Sorry, I already know what she said, and I know what my reaction is going to be. Go ahead.
She said, I think their announcement that they began selling some of their announced 425 million APE shares at such a low per-share price speak to their cash needs or perhaps more frivolous spending. What did you think when you read that?
Oh, it's kind of ridiculous. When we launched the APE security in August of 22, like, a couple of months ago, we said right back then that we were going to raise capital with it, but we were going to do so with a slow and steady pace, judiciously. The market sets the price. We don't set the price. We'll raise capital at whatever the price is, but we're not going to flood the market by selling a ridiculous quantity of shares. That's not the right way to do it. Remember, nobody's more practiced at this than AMC. We raised over $2.2 billion through an at-the-market equity raise in 21, and we know what we're doing. We're doing it the right way. We'll continue to raise capital, and that's a smart way to run our company.
You said you're going to continue to raise capital. How are you going to continue to raise capital?
We have the opportunity to raise capital every day in the market through an at-the-market equity raise. But we're only going to do it in small quantities, judiciously, wisely, smartly. Look, these are precious things, our secured stock. I mean, our preferred stock. And we don't want to waste it. We don't want to spook the markets by trading too much too fast. And as I said, I don't think there's been a company around who's done this more adroitly than AMC has over the past 2 years. We do know what we're doing.
Adam, how do you think about acquisitions at this point or any kind of more consolidation in the space?
Well, it's pretty intriguing, I must say. There's a big difference between AMC Entertainment and just about every other company in our industry. Look, our industry has been struggling because Hollywood has not released as many movies as it traditionally has. But the difference between AMC and almost every other company in our industry is that we raised so much money in 2021, basically, that at the end of the third quarter, we were sitting on $900 million of liquidity. That puts us in a position to take advantage of what our competitors stumble. You may be aware, Andrew, because you're a pretty knowledgeable guy, that the second largest player in our industry, Cineworld in Europe, Regal in the United States, they had to file for bankruptcy in September because they ran out of cash. There are a lot of other movie theater circuits which are tight for cash. We're flush. We had $900 million of liquidity. I think there's some bargains out there to be had. I think we can grow our network of theaters by adding high quality, profitable, attractive theaters, do it at bargain basement prices, just in time for the movie industry, Hollywood, to give us more movies in 23 and 24.